U.S. stocks closed mixed on Wednesday. The Dow Jones Industrial Average gained 260.31 points, or 0.5%, to close at 49,501.30. The S&P 500 fell 35.09 points, or 0.5%, to 6,882.72. The Nasdaq Composite plunged 350.61 points, or 1.5%, to 22,904.58, nearly erasing all year-to-date gains. U.S. private employers added only 22,000 jobs in January, far below the expected 45,000, indicating a nearly stagnant labor market. Chip stocks suffered heavy losses, with the Philadelphia Semiconductor Index falling 4.36%. AMD plummeted over 17% on weak Q1 revenue guidance. Micron Technology dropped over 9%. Nvidia fell over 3%. Broadcom declined 3.26%. Most large-cap tech stocks declined, with Tesla down nearly 4%, Meta off over 3%, Amazon down more than 2%, and Google falling nearly 2%. Apple rose over 2% and Microsoft gained 0.72%. Software stocks continued to slide, with ServiceNow and Salesforce each falling about 7%. Memory chip leader SanDisk plunged 15.95% from $695 to $584.55. AI company Anthropic's legal assistant tool continues to trigger panic in the software sector. The tool automates contract review, NDA classification, and brief writing. Thomson Reuters fell over 15%, and LegalZoom.com dropped over 20%. Wall Street's skepticism toward software stocks is intensifying as investors worry about disruptive AI impacts, accelerating capital flight from the tech sector. Chinese ADRs were mixed, with the Nasdaq Golden Dragon Index falling 0.65%. Taiwan Semiconductor lost 1.64%. Alibaba dropped 2.81%. Baidu fell 2.50%. Pinduoduo dipped 0.13%, and Bilibili declined 4.21%. On the upside, XPeng Motors gained 4.06%, and Li Auto rose 1.82%. U.S. January ADP employment data badly missed expectations with only 22,000 jobs added, a recent low. Education and healthcare added 74,000 jobs, preventing overall negative growth. Trump signed a funding bill Tuesday, ending the partial government shutdown. The Bureau of Labor Statistics announced the non-farm payrolls report will be delayed to February 11th, with CPI data moved to February 13. Fed Chair Powell recently indicated no rush to cut rates, with markets expecting only 2 cuts in 2026. In after-hours trading Wednesday, AMD remained under pressure. Eli Lilly jumped over 9% after Q4 revenue of $19.29 billion, up 43% year-over-year, with full-year guidance of $80 to $83 billion, far exceeding expectations. Alphabet reported earnings after the close, with market attention on cloud business and AI investments. For Thursday, key focus areas include Amazon's post-market earnings. Friday's non-farm payrolls report has been delayed to February 11. Geopolitical risk remains as U.S.-Iran nuclear talks are scheduled for Friday in Oman, though disagreements persist over negotiation scope. Technically, the Nasdaq has broken below 23,000, and failure to reclaim this level quickly could lead to a test of 22,500 support. Chip stocks face dual pressure from AI demand volatility and high valuations, likely continuing to fluctuate in the near term. Defensive positioning in consumer staples and healthcare is advised.